lines. You know, they're the areas where price fails, right? Where it starts to struggle, when it starts to consolidate, right, or get some rejections off of those levels. But one thing I do want to mention is that those levels, right? Those levels are not always going to be accurate levels. Okay, I'll explain that in a second. There is going to be times where candles go through that level, right? But just because a candle breaks that level doesn't mean it's going to go in that direction. All right, but so these lines that we're going to talk about right now, the support and resistance lines, you guys want to treat as zones instead of just relying on that one line. Okay. And like I said, I'm gonna talk to you guys. I'm gonna explain it more while I go through this this video right here that I'm creating for you guys. Okay, so now when you're looking for support and resistance lines, you guys want to start on the higher time frames. Okay, the higher time frames, at least the daily. And I say that because the higher the time frame, the more significant that level will be, the more stronger that level will be. So the bigger the rejection will be off of that level, which ultimately leads to how many more pips we will grab off of that level. Okay, so the higher the time frame, the more pips we will be able to grab, essentially. Okay, now when you are drawing these support resistance lines, you want to look for areas, right, where price made a nice move up and then just stop out of nowhere. Okay, then completely just got rejected from those areas, right? And start placing your lines at those areas right there. All right, and a little trick that you guys can use, that I always use, right, is very cool trick and it's very accurate way to place these lines is by going to your line chart. Right now you're on your candlesticks right here, but we're going to our line chart. And why I say that is because the line chart, it doesn't, you don't see the wicks on a line chart. It only marks down the close of the candles. All right, so when you put these candles, when you put these lines at the close of these candles, right, and it's lining up with a lot of closes, that is a very, very accurate line. Okay, like I see this line right here, right? I got this peak right here. All right, I see this peak, and why I put it there is, look, you see this right here, right? Just because it's not touching this right here, right, doesn't mean that there wasn't rejection from it. Remember, the wicks are not placed when you use this type of chart. Okay, so just for example, right before I really get into it, look right here, right? You see this little gap. I guarantee you that if we go to a chart back to the candlesticks, that there's wicks hitting that level, right? And look at that, there's a wick right at that zone right there that just tapped it. Okay, so that's obviously a strong level. Now let's get back to the line chart. Okay, another reason why I chose this level is because of this. Let me see, hold on. Let me get my Eclipse tool. Okay, it's because of this level right here. Look at this, right? So we got this rejection right here, right? We just seen that it was a wick. We got this rejection right here, right? So it went from resistance over here. It broke through it, acted as support right there. Again, it acted as support again before it finally broke through it. Came up. I'm not sure if that is a wick right there because that is kind of far, so we'll skip that one for now. But it came back down, right? Acted as resistance again. And as you can see, right, this whole time is acting as support and resistance multiple times. Like, that's been support and resistance a lot of times. So that's how you know a level is a very strong level, is by looking at stuff like that. All right, so we got 1, 2, 3. We got 4, 5. We got 6, 7. You see this level? Like, this is a very, very strong level, guys. And we're on the daily time frame. So we know that next time, if price comes back down to this level, right, we can expect some type of reaction off of this level, because every time price has gotten here, there was a reaction off of that level. All right, and that's how we set up. This is the beginning of actually setting up a trade. Okay, now I'm just curious, right here, because remember I said that these gaps is fine. I want to see if there's actually a wick right there. If the wick actually hit it. All right, no, it didn't. So now, and that's how we do it. We just continue finding areas like that on this chart and just mark them up. All right, we mark them up with this method by using the line chart. Okay, so we got this zone right here, this level right here, right? and I go off of this peak, it's currently right here, it's testing right here, tested right here as resistance. We go back in time, we had a couple breakouts, but that's nothing, right? Because it came here and it tested as resistance, it tested as support. So this right here, you could count this as another strong level, okay? And you just want to just continue to move around with it, just so you could get some very accurate spots, okay? Now, I will say this, it doesn't have to be, like, the candles don't have to be directly under it. Like right here, this is a strong level, right? But this one has a little peak that went above it. That's fine. But at the end of the day, we're treating these as zones. Remember, I said in the beginning of the video, you want to treat these levels as zones, okay? Like say, like one word that I always use. Like say a candle, right? Let me draw something for you guys. Always remember this one about to explain to you guys, right? Say this is a candle right here, right? And this candle currently went up, right? It came up and it broke above this line, right? You don't want to just buy right there. No, you need more confirmation before you take the trade. And confirmation will be another candle, right? The close of a second candle, right? Now that's telling you right there that we have bullish momentum, right? So then you can start looking for an entry to take a buy on a retracement, right? You don't take a buy right there, no. You wait for the retracement and then you take a buy, okay? But now let's say price came here, right? It came here with this candle, and the next candle right here that came down came right back down and completely engulfed it. Right? Let me change the color a bit just so it's a different color, right? So it's something like this, right? In fact, let me make these easier colors so you can see. I'm gonna make this one red for bearish. Alright, and I'm gonna make this one green for bearish. Right, for just so you guys can see it easier, right? So we have this candle that pushed up over this line, right? This is a strong line, and we know it's a strong line, right? Because we're doing it on the daily and we're using the line chart, right? So we have this push up, and then we have this bearish candle engulfing that goes right below it, okay? That is a fake breakout, okay? That's why you want to wait for the next candle to see how it reacts off this level, all right? Because if it does something like this, then it's just a fake breakout, and it's going to continue back down, all right? But if it does the other way, which I'll draw right again, right? If it does like that, it closes above it, and another candle forms like this, right? Then we have bullish momentum. We wait for the pullback back into this level, and then we look for a buy opportunity to go long, okay? So I just really wanted to stress that real quick with you guys so you guys understand that concept also, because you guys really have to treat these as zones, all right? And we just continue doing that throughout the whole charts, right? You start off by looking at an area where price went up to and just failed, and then you look for other structure levels to see if that level is very significant. As you can see here, right? It acted as support, resistance, go back over here, acted as resistance, support, resistance. Look at this. It happened a lot of times. Look at this, right? Support, resistance. And that's how you really find very, very accurate level. It's going to be as accurate as you could possibly get using just a support and resistance line, okay? I hope you guys understand what I mean by that, all right? And so when you do that, right, on a daily, and then you can start working your way down, right? You go down to a 4-hour time frame, and then you start, marking up some more support and resistance levels on this time frame, So with this one right here, we acted as resistance, support, resistance, support. So this is another strong level that we want to keep our eye on, right? And mind you, these are actually big zones that we're seeing right here, right? This is about a 70 pip zone, so that's 70 potential pips that we can grab off of just playing off of these levels. Right now, this one right here is also like 50 pip zone, so that's another 50 pips that we could possibly get. Okay, and we have this level right here also, which acted as support, resistance, right? And this is how you take trades based off these levels, and you could literally make money non-stop if you mark your support resistance lines this way that I'm doing right here. This is, in my opinion, the absolute best way to do it, because it's the most accurate it's going to get. Okay, and now you can continue going down to a lower time frame if you choose to. I really don't like going past the 4 hour too much, because then it's going to be a lot of noise. What I mean by a lot of noise is like all this. There's going to be a lot of different places where the price stops, right? You're going to end up having like this 15, 20 pip gaps in between. If you're a scalper, right, then yes, you can by all means you can do that. Have 15, 20 pips in between and just grab those here and there. But if you want to like intraday trade and you want to swing trade, you want to stick to the ones that are on higher time frames, at least the 4 hour and up, okay? So, and you just continue doing it the whole way, man. Like, it's really that simple. This is not complicated whatsoever to do. This is going to take a little bit for you to get used to looking at the peaks, right? And actually looking for the strong levels. And once you got all your levels marked up, you go to the candlesticks and look at these levels. Right? These levels are very strong levels. Look at this. These are strong levels right here that I just marked off. So where price gets back to these levels, you can expect something to bounce off of these levels. It's just bound to happen because of all the rejections that happened off of it before. Okay, so this goes for any single currency pair also. Every currency pair you can do this exact same method. This is the exact same method that I go through and it's been working for me for the past year and a half, 2 years. So as long as you guys really implement it and practice on placing these lines, you guys are definitely going to be able to kill it. Pay attention to what I said earlier about the candles, right? You got to treat these as zones because if the candle breaks out to the upside, that's fine. You want to see what the next candle does, how that one reacts, to tell you exactly where it's going to go. Alright, so that's going to be it for this video, guys. Thank you. For the video, and this one will go over how to properly draw trend lines, right? Again, just like I mentioned in the last video, the trend lines, right? You want to treat trend lines sort of like a zone, okay? Because if you get a false break, right? If you get a candle that breaks above it, you gotta wait for the next couple candles to really tell you what exactly it wants to do. And I cannot stress enough how important that is, guys. You have to have patience in order to, if you want to really be profitable trading, okay? But characteristics of a trend line, right? For a trend line, once you get 2 peaks, right? Once you find 2 nice peaks, okay, that starts a trend line. Once you get 3 rejections off of the trend line, though, right? That confirms the trend line. All right, let me say that again. Right, 2 touches creates a trend line. 3 touches confirms the trend line. Right, when the 3rd touch rejects off of it, it confirms that it's a strong level. Okay, and just by looking at this chart right here on the 15-minute, as you can see, AUD/USD has been on a steady, decline, right? And so we have, just looking at this area right here, look how many touches we have to this trend line, right? So we got 1 touch right here, right? Then we got another touch right here, right? So this right here starts our trend line, right? This is a trend line, right? But we need the next touch to confirm the trend line, which is what happened here, right? So this level right here, right? Remember what I told you? You want to treat this as a zone. This candle right here initially broke above it, right? But since we're treating this trend line as a zone, we're going to wait for the next couple candles to tell us exactly what it wants to do. And just by looking at what happened with price, right, we had the strong bullish candle, then we had 2 indecision candles, right? These candlesticks right here are indecision candles, right? And then we had it followed by a bearish engulfing. So that right there would have told us that, all right, this is, it's not going to continue to the upside. That was just a little false break. There's nothing to worry about. All right, so that's exactly what happened, and then it dropped. Okay, this could have been actually a nice entry off of this trend line, right? And that confirms the trend line also. Remember, 3 touches confirms it. So now we know going forward that anytime price comes up to this level, you're going to see some type of rejection off of it. Okay, and what I mean by rejection, when I say rejection, I don't mean that it's just going to continuously keep dropping, even though they're here. I'm talking you're going to see price stall around this level, okay? And look what happened here for the 4th touch, right? We had a breakout, right? A fake breakout again, but look at the next candle, right? This is why you have to have patience. Sit on your hands when this happens, okay? Look at this next candle was another bearish engulfing, okay? That could have been another entry right there, all right? That's why we sit on our hands. We wait for price. And if you look at the next time price came back up here for the fifth time now, fifth touch to the trend line, all right? It broke above it again, but look at the next candle. Another bearish engulfing. That could have been another entry, guys. You see, I hope you guys understand what I mean by this now, right? You want to have patience when it comes to these trend lines, especially if you get a break of it, right? You don't want to just jump in a buy. That's not what you do, right? There is people that got caught in a buy off of this level right here, right? Because it broke above it, and they took a buy as soon as it broke above it, not waiting for the next candle to come out. It's all about patience, okay? And if we keep on going, right, for the sixth touch, all right, this touched 6 times, right? This one just whipped it and then completely dropped again, okay? So you can see that this is a very strong trend line, all right? Now, say we do get a break of the trend line, okay? Say we do get a break of this trend line to the upside like this, right? First of all, we're going to wait for it to get like a nice, big impulsive break, right? We want a move that's going to tell us, like, all right, yeah, we're definitely broken, all right? That's fine. You don't chase the trades, right? They don't want to get caught. These trades do not want to get caught, so we don't chase trades over here, all right? All you got to do now is wait for this pullback, okay? You want to wait for this pullback. Preferably to retest this line, right? But it's not always going to come down and retest the line, right? You always want to look for confluence for structure also, and other levels like Fibonacci levels, right? But this is where we look for our trade off of it. If it does break to the upside, right? This is where we're looking for our trade. We're looking for this exact move, a strong move upwards, all right? A retracement, and this is where our entry will be on the retracement, okay? And how we find that entry, we use confluence, right? We got structure levels to the left. We can throw our Fibonacci, see which levels is at, preferably the 618. So the risk of reward is actually pretty good. All right. And then we go and we take our buy position and ride it up along. Okay. So that's essentially how you use the trend line. And we can honestly do this all day long, guys. Like, we can go back in time and continue seeing like AU was on a massive downtrend for a while. Right. I mean, I'm on the 15 minutes though, but this thing was just dropping. Right, and so then we go again. We start looking for more levels, more trend lines that we see that might be stronger. Okay, so we got this pick right here, right? Now look at this right here, right? We got 1, we got 2 touches, right? That creates the trend line. So what happens when we got another touch, right? It broke right through it. It started bouncing off it. It's clearly respecting this trend line also, all right? Even though it's much more uglier than the other one, is still respecting, because look how it's playing right between it, okay? That's what I say when I mean we need a very strong impulsive move off of the candle to tell us exactly what it wants to do, okay? And this right here is what I'm talking about, like this strong move right here. How you see how it went away from it? It's not just going back and forth, consolidating through essentially next to the candle, right? This is the move I'm talking about, a nice strong move. And then we wait for a little pullback, all right, and then we take the entry to continue it, going to the downside. Okay, I hope you guys understand what I mean by this. It's really not that hard, guys. It's more of a just having patience kind of thing, right? You have to sit on your hands. You can't always want to jump in off any sudden break of strong lines. That's not how it works, right? That's what rookies do, and that's how rookies always lose their money. Okay. Now let's see right here. We got this other level right here, right? This is a beautiful level also. As you can see, we have 1, 2 creates the trend line. 3 confirms the trend line right here. Okay? This is beautiful right here, right? So we got 1, we got 2, right? We got 3, which confirms that it is a strong level. So now anytime it's gonna come near it, right? We gotta treat these as zones, like I said. So that's 4, right? We got 5. Right, and then finally we got a break of it, right? But we don't get in right here. No, we don't do that, right? We let this move go. Okay, we let that move go. Now, what we're looking for on this, right? So we let this go. That's fine. We don't chase the trades, right? So we wait for this pullback. This pullback is what we really want, right? This is where we find our entry. And if you look to the left, right, and it structurally screws, right? And I'm gonna show you guys in my video, my structure video that I have on this course. Once you guys watch that, you guys understand what I mean by that, right? But structure to the left leaves clues, right? So we broke this level, this strong move. Look at this pullback, right back into this structure level right here, right? That is beautiful. This would have been a gorgeous entry for a sell. And look at, as you can see, this thing completely just dropped. All right. So this was a strong trend line. We waited for a massive, like a strong break of it. Okay, not just this little thing, a strong break. We wait for the pullback, and this would have been our entry. And that's how you take very nice entries using trend lines, guys. Do not chase these trades, right? You're gonna lose a whole bunch of money trying to guess this position right here, guess that it's gonna go down, because it's not always gonna break this and go down. Okay, wait for the move, wait for the pullback, and then get in your trade. Okay, so I hope you guys understand what I'm saying. All right, just to go over again, when you're doing a trend line, 2 points create a trend line, 3 touches confirm the trend line. Okay, that's it for this video, guys. Out. Video, and in this video I'm going to show you guys exactly how to find the trend. Okay, this is the most simplest way to do it. Okay, there's a bunch of ways to find trend, right? But this is the most simplest way to do it to keep you guys on point, so you guys are not betting against the trend, which is a no-go. The trend is your friend. I know it sounds cliche, but it's true. Okay, there's a reason why everybody says it. The trend is your friend. You never want to counter trend trade, obviously, especially if you're new. Stay away from it. Stay with the trend at all times, so you're protecting yourself, you're protecting your account at the end of the day, okay? And the easiest way to do it is by adding something called a moving average, right? You want to add 2 moving averages on to your chart, okay? For me on TradingView, the way to do it is you go to indicators. Right, you can type up here right in the search bar and just type in moving averages, and it'll come up moving average right here. All right, and then you want to add 2 of them. You go to this plus sign right here so they show up. You click on this format button, and I'm going to put this one green. Right, inputs. This input I'm gonna keep that one as 9. Okay, and then I'm going to the second one right here. I'm going to change this one to 21. Okay, these are the ones that I use personally. And this one is going to be red. Okay, let me see. I want this to be, yep, that's fine, right? Now, when you're looking for, right, you're looking for the trend. The easiest way to do it is by using these moving averages I just mentioned, okay? And why do I say that? Is because the way I use these moving averages is that anytime the green line, which is your 9 moving average, is above the red, that is a good sign that we could start possibly going on an uptrend, okay? And just by looking at over here, right, we have this little consolidation which is going sideways, right? And then finally we got this moving average crossover, right? The green one on top of the red, and it stayed on top of the red for a while, right? It was riding it up for a while, right? So we could have caught this move up, and then it just started consolidating again. Remember, right? As long as structure doesn't break, you are fine, okay? So I'm gonna teach you guys how to find some quick structure levels too, especially when it starts consolidating like this. You want to know if you're gonna continue in an uptrend or if you're gonna start going down. Easiest way to do it is, right, if we have this move up. Right, so we have this move up right here, right? We have the cross right here, and we have this strong move up, all right? And then we have some consolidation, doing absolutely nothing but going sideways, right? It's not doing nothing, all right? You want to draw a support and resistance line at the bottom, right? The lowest peak that is shown. Why? Because if this breaks, right, if this level breaks right here, then we could be going back in the downtrend. And then we start looking for the moving average crossover, right? And then we look for a sell. Right, but since this low was never broken right here, right, and this is the low right here, that's telling me that we are still in an uptrend. So we wait for the crossover again, right, which happened right here, the crossover, and as you can see what happened with the crossover, we rolled this whole thing up all the way over here, which is about 200 pips away, guys. 200 pips away, okay? And you can literally stay in this whole move until the candles, or not the candles, the moving averages cross back over. Alright, they didn't cross back over, so up here, and that's 200 pips away. Alright, and then we have some consolidation once again. Alright, so you start drawing your levels out. Okay, so we have this level right here, right? It came down from this level. Once it broke this level right here, right? Because this is your immediate structure. With this move up, right? We have this one, and then this one come here. It sort of double topped, came down, broke below it. You know, it came formed the lower high, and then broke below it again. Okay. So once we got back above this line right here, right, and we got this moving average crossover again, same concept. Now we start riding the trend again. Okay, we're riding it up all the way until we see it cross again, which is right here, and that's for another 150, 200 pips, okay? And now listen, when I'm saying this, I don't want you guys to take trades solely off of the cross, right? No, that's not what I'm saying whatsoever. I'm just showing you guys that you can literally ride
watching my
videos,
videos,
also using these moving averages as a confirmation. Because at the end of the day, all these
the bank closed
resistance lines, trend lines, the moving averages, these are just all confirmation. You need
get my card and see
at least 3.
See about refinancing, because since you got a bank account with Bank of America, that would be you.
Now the moving average crossover can definitely be one. If you use that in confluence with trend lines, if you use that in confluence with support and resistance, with supply and demand, with Fibonacci, you can have a solid setup based on all these confirmations that we're getting, okay? But back to this one. Same concept, right? We're here, we ride this all the way up until we get another cross. We get a cross right here, then we got some more consolidation, right? Then we had a nice move back up, and then we finally start getting some major consolidation, and then we see, obviously, the big downtrend right here, all right? Which you could have took a nice sell once you got confirmation, right? You could have got sell, you could have seen this crossover, you could start anticipating to jump in the sell, right? And you do that by looking at structure. You do that by reading all the tools that you guys are going to learn.
You want to refinance.
So
I say, remember Janine has said after your first year.
Basic way to find trend.
You want to refinance
Video, I'm going to go actually
your house
more in depth. It's in the advanced
to get a lower rate.
It's called market structure.
Yeah, she said refinance after your first year
one is a much,
to get
more
a lower rate.
Way to find the trend
and that's
and knowing if it's going to continue or if it's going to reverse. So by all means, please take advantage of this one right here, though.
And that's why I said, since I need a new card, we could speak to somebody in the bank
which is,
about the process to refinance it.
Definitely watch that video more than once. Watch it like 10
Cause
times.
Thomas said he refinanced his house. Remember I told you that last week.
Way to determine trend, okay?
Remember I told you when we went out, when me and Thomas went out, he said he had refinanced his house.
Market structure
and it was cheaper.
Average crossover, then you know you're definitely in the right way of the trend, okay? So that's going to be it for this young guys. Thank you again.
Yeah. The best time to refinance is your first 5 years anyway.
What is going on, everybody? Abel here. All right, now for this section, and this video, I'm going to go over supply and demand zones, which I feel are very, very important to learn. I personally would rather use these zones rather than support and resistance lines, because most people, even though like I tell you guys to treat those support and resistance lines as zones, is very hard to do, especially with live chart, because most people just don't have the patience to just wait, right? So I always recommend to do these supply and demand zones, right? And I like to call them flip zones, and I'll explain to you why I like to call them flip zones in a second, okay? But essentially, when you see a supply, how to create a supply and demand zone, right, is you take your rectangle tool, right? And if your rectangle tool is not showing on TradingView, you just click on this little arrow and you go down to it, right? And you just go to the high, right? You go to the high, and then you extend the candle out, hitting the body of the next candle, right? And if there's no peak here, right? Like say this is right here, right? And this move isn't here, then you just put it right on the body. The wick and the body needs to be touched, all right, for this to be a valid zone, okay? And as you can see, right, if we would have did it, price came down, it came back up, retested that zone, right? And that's where we look for our entry in that zone. That's what we call a kill zone, right? And you can take a setup based off of this zone, okay? And if it's easier for you guys can also, right? You guys can also put start making things easier. Start marking things up for you guys, so it's easier to see. It's only going to benefit you guys, right? So since we know that this is a nice zone, right, you can mark this up and put sell zone in that area. So next time price comes up there, what do you think is going to happen, right? The likelihood of seeing some rejection off of that level is pretty high, okay? So that's what you want to do. And now for this level right here, right, you can take advantage of all these levels where price stopped, all right? Now we got some rejection right here, right? Same concept as before, right? You put it on the body to the wick, and then you extend it out. And look what happened right here. Now, obviously, this is a minor supply and demand zone, right? Price came down here after creating this low right here. Price pushed up, bounced off of this zone, came down here, right? And we've seen some rejection off of this level, right? So we could have realistically put, you know, on a lower time frame, since this is a minor zone, you want to go to a lower time frame, and you could probably catch some pips off of this move up. I mean, it came into the zone and went up around 60 pips from this zone. Around 50, 60 pips from this zone. So there's some pips to be made, right? But now this is what I'm talking about, the flip zone, all right? Now we got this zone right here, right? So for price, what we want price to see, now that we see that we're clearly in a downtrend right now, right? The moving average crossed, right? Remember I told you about the trend, moving average crossed. We got a whole bunch of broken structure levels. So now we could honestly see a push back into this zone right here and see if we could find a case for a sell right back in this zone to potentially keep on, you know, to keep on dropping, right? Now, I'm not saying this is exactly what's going to happen, but it's always a scenario that's definitely possible. And we can honestly, if we do get a nice, you know, reaction off of this level, we could take a nice short position right back into this structure down here, right? That's a safe bet. Why? Because now we're going right back into structure, right? We don't care for this buy because we know we're in the downtrend, right? We don't care for this buy. We want to take this sell either in this zone right here, right? Or in the zone right up here, right in this level right here, right? Right there. And why am I drawing that one out is because price, after it came down here, right, it pushed up and it failed to go any higher and created this wick, right? One thing about wicks is that wicks do not lie. Look how long this wick is, right? This wick is actually longer than this body. So that's telling you that there's a lot of seller pressure in this area. So you could draw this zone also. And we got to see price, right? Once price pushes back up into the zone, we got to see how it reacts off of these levels, okay? If we see some rejection off of this level right here, right, then we take the trade. But if it does continue pushing up, then we could see some rejection in this zone right here and then possibly take the trade, all right? One thing about this is that I can predict this all day long, right? But predicting doesn't do much. We want to react to price. We want to be prepared for anything that the story is telling us. Because at the end of the day, these markets, right, they're telling us a story. We just have to learn how to read them correctly. And by us learning how to read them correctly, that's how we're going to be able to react to them at the end of the day, okay? So, like I said, these zones, this is what I call a flip zone. Because it was here, right? Acted as a nice support zone, finally broke through it. And now I'm anticipating to act as a resistance zone now. That's why I call it a nice little flip zone, okay? And we can just continue marking these all the way down, right? So we see price created this low right here and then got rejected and just went up, right? So we can mark this out also. You can mark this up. So if price does break below it, right, since we're on a higher time frame, if price breaks below this, you know, we could anticipate a pullback back into the structure and possibly look for another sell, right? And when I mean possibly, I really mean possibly, because we really never know, you know, if it's going to stop right there or if it's going to push a little higher. But we want to be prepared for what's going to happen, okay? And you can literally do this all the way down, all right? And look at this right here, right? We have another flip zone, right? Flip zone, okay? And how I did this one is, right? I got this the top of this wick right here. We could do all. We could listen. If you really wanted to, you could use this wick up here, but that's too big in my opinion, right? I'm fine with this first wick right there, right? Because no candles bodies closed above it, so this is a strong level, right? And then you just extend it out. And look at prices getting rejected off of this level, right? So if price doesn't even push up past this level, I would not be surprised at the end of the day, because you can't be surprised by what the market does. The market is a living organism. It's going to do whatever the hell it wants to do, right? So we just got to react to these zones, and how we do that is by we just go to lower time frames now, and we start looking at price action on lower time frames. Okay, price action is key, and what I mean by price action, that's another video that I'm gonna record for you guys also, so you guys understand what I mean by waiting for price action. Okay, because that involves like candlestick analysis, that involves market start, that involves a whole bunch of stuff, and that one's gonna be in my Confluence series that I'm about to have also. Okay, but other than that, this is exactly how I draw my levels, right? These are accurate zones that you could take trades off of, okay? And you can literally do this all the way down. You can put a zone down here, right? You can put a zone right on top of this level right here, because price doesn't just stop here for no reason, right? There's a reason why price is stopping right here. We just can't see it because it's all the way back in the past, right? But we could put a level right here. We could put a level right here, so on and so forth. And you can do as many as you really want, as long as they're strong levels, okay? And you can expect some rejections off of those levels. Even if it does break through one level, wait for the pullback back into that structure, and then, you know what I'm saying, set up the trade. All right, it's that simple, okay? But that one's going to be it for this video. By all means, please utilize these zones. In my opinion, they're much better than just normal support and resistance lines, because it's actually giving you an area that we like to call a kill zone, all right, to where we look for our trades, okay? So thank you guys again. Out. How's it going, you guys? Abel here again, and in this video I'm gonna speak about divergence, right? Divergence, what it means is when there's two things diverging against each other, right? So how we use divergence is when price is doing the opposite of what an indicator, right? A momentum indicator like RSI, MACD, stochastic, right? When it's doing the opposite of that, that is called divergence, right? Now there's multiple different ways of, there's a couple different ways of divergence. There's regular divergence and there's hidden divergence. The one that I just really use is just regular divergence. So that's the one I'm going to speak about, because I don't want to speak about things that I rarely use, but essentially, right, when we're looking for divergence, you really want to look at it on a higher time frame for the bigger moves, right? So it's a more powerful thing. And essentially what we got is like this right here, right? You clearly see that price, went down, right? This low is lower than this low right here, right? A lower low was created. But when you look at the indicator, right, is the RSI, right? If you look at the indicator, the same exact spots, right? Look at this, right? Look at that, right? It's going up. The momentum indicator is going up. So what's that telling us is that this, this little downtrend, could possibly be slowing down, right? That means momentum to the downside could be shifting, but we might be going up to an uptrend. Okay, and if you look at obviously what we have here, that's exactly clearly what happened, and you want to just keep in mind though, right? I always say this. You want to keep in mind though, it's only one confirmation, right? Divergence. I actually know a lot of good traders that trade strictly divergence, right? Do I recommend it? No, right? We always want multiple confirmations, and for me, divergence is definitely a very good confirmation, right? Because it's telling you when momentum is slowing down. Right? It's as simple as that. There's nothing crazy about this indicator, right? It just tells you when something is going to happen. All right? And it works in every aspect of a trend. Like, look at right here, right? With this right here, you see we got, this is basically just going sideways between these peaks right here. Right? I had like a little triple bottom or inverted head and shoulders, whatever you want to call it, right? But look at the indicator already. Right, the indicator is already going up at the same exact spot. Right, the momentum's already moving upwards. So with that being said, right after this little pullback, right, because this is only a pullback, since we are in an uptrend, this is just a pullback, right? That's telling us that momentum should be heading upwards, right? The uptrend should continue, and that's exactly what happened, as you can see, right? Once we got this little uptrend right here, right? Look at this, it started moving up and it went up nicely after that. All right. Now let's see another one, and you could literally point these out all day long, right? Like right here for this top, right? We got this top right here, double top, right? It's the same level, same height, same same everything, right? But look at the the indicator, the momentum, It was to the downside. It was like heavily to the downside. It was very steep. And that's why we seen this push down, right? That's why we seen this nice push down. So if you can catch these divergence levels and you can spot them out quickly, you can tell when something could start trending, right? Or where a reverse of a trend could start. All right. When I say it literally happens all the time, it literally happens all the time, right? Look it up here, right? We got this level up here. This is a nice one, right? We got here, price, slightly went up higher than this one, right? With candles of the body. But look at the indicator already, right? The indicator is clearly already going down on that same exact, that same move right here. You can see where the cursor's at, right? Starts right there, ends right there, right? So that's telling us, right? I was actually in this trade. That was telling me that the momentum, could be slowing down to the upside. And look what happened afterwards. I mean, it speaks for itself, right? Divergence is definitely a unique tool. It's amazing. Like I said, I personally know traders that kill it with divergence. It's a great tool to have in your arsenal when you're looking for your confluences, to add up for you to take a trade. I definitely utilize divergence when I'm looking for setups. It's one of my main confirmations, but it's not my only confirmation. All right, keep that in mind. All right, it's a very good one to use, but don't use it by itself. All right, because you can be screwed. Right, this thing is it's not perfect. It's like any other tool out there. Sometimes they are a little late. They are lagging indicators for a reason. But if you catch on to a trend early, like right here, right? Look at this. This is clearly lower than the other one, right? And you got this peak right here. Once you start seeing this push down, right, telling you that there's momentum to the downside, that would have been a nice entry, a very, very nice entry, and you could have wrote it down. And that's based off of the momentum that the indicator is showing that there's going to be, sellers should come in the market pretty soon. So like I said, that's going to be it for this video right here, guys. Go back in the charts, right, and mark off these divergences. Get used to them. It's only going to help you out in your trading, okay? So definitely get used to those, and I'm actually I'm gonna start quizzing you guys and stuff like this, right? I'm gonna start having the quizzes up so you guys can tell me exactly if this is divergence or not, because I want you guys to really, really learn this stuff, really learn it, get used to seeing these things, okay? So it's gonna be it for this video. Thank you, guys. How's it going, you guys? Abel here, and in this video I'm going to speak about Fibonacci retracement tool. Okay, this tool is very, very beneficial to everything, right? Because this tool right here, what it does, it measures the retracement of a trend, and essentially is where we're going to be looking for an entry to take a trade on. Okay, so this tool is very, very beneficial. Like I said, if you can learn how this tool works, right, and learn how to read the levels of this tool, then you will be very, very profitable. Okay, now as you can see on any of my charts, I rarely use any indicators, okay, but Fibonacci is something that I use all the time, and it's very big. It's essential to my trading style. So anything to do with like structure is all based off my Fibonacci levels also, okay? Now, so essentially what you're doing with Fibonacci is you want to look for an impulsive move, right? An impulsive move up, to see an impulsive move up that could possibly start a trend, right? And then you want to measure the retracement of that trend to look for an entry, okay? Now I'm going to start at this low right here just because it looks like it's the low, right? The low of the chart that we got here, and see, I'm going to show you guys how many opportunities you guys could have got in based off using the Fibonacci tool, right? So we got this impulsive move up, and then we got this retracement, right? This is just a retracement now, right? So once this level broke right here, right, because this is the previous structure, once this level broke right here with this impulsive move up, that is telling us that, all right, we could be going into an uptrend, right? Listen to what I'm saying. This is very crucial to the whole strategy, right? So once you see this move up, right, and it breaks a structure level to the left, that means that's your trend right there, okay? That could be your main impulsive move to start the trend. And then when that happens, like for me, right, personally, how I trade Fibonacci, right, because there are a few different ways to trade it out there. People do it completely different. I'm showing you guys the way that works for me, right? I do it from low to high, right, the low to the high, okay? And now all I'm doing is measuring this retracement, okay? These levels over here, explain to you the percent and retracement that it has, right? So I have the 23.6. So as soon as price comes down to this level, it retraced 23% of the move, right, of the uptrend move. We got 38.2, 50, the 61.8, 78.6, 88%, and then we got the 100% move, okay? Now the main ones to look at are the 38.2, right, the 50%, the 61.8, the 78.6 levels, okay? These are the main ones that usually get hit. The 61.8 is the golden ratio, though. Like, it's legit the golden ratio. If you Google Fibonacci, right, because this whole world is honestly based off of Fibonacci sequence. If you Google it, you'll see that 618 is the golden ratio, and that's the one that we usually look for to get hit. But just because it's the golden ratio doesn't mean it's always going to get hit. And we can use this example right here, right, on this impulsive move that I'm speaking about right now, right? So we got an impulsive move up. We have our retracement, and we're measuring that retracement, okay? So what happened after this retracement, right? We started getting a lot of consolidation. So that's telling us that, all right, you know, maybe it could be failing at these levels, the 50% fib level, which is the closest it got to, right? And then you just look to the left to see if there's some structure to the left to confirm it, right? To add some confluence for you to enter the trade. And as you can see, right, there is definitely some structure level right in this area over here, right? This is a strong level, right? Because we got this right here, this touch right here, this little false break, right? So you use that confluence with your Fibonacci level to take a setup, okay? Now, I'm not going to go too in-depth with it, with like confluence or using it, because that's going to be in my confluence section, which is going to be I'm going to be dropping so many nuggets in that section. But right now, I just want to really teach you guys how to use this tool, okay? So we use like this, right? We get our move, and we see what happens here based off of this level right here, right? This 50% fib level. And then we got some bullish momentum. And when I mean by bullish momentum is learning the candlestick formations that I was telling you guys about in the previous section, right? Japanese candlestick, right? We're in the 4-hour chart, right? So this move right here, right, is telling me, all right, maybe we could possibly start seeing some move up, some rejection off of this level, right? Because if you go to the lower time frame, right, and you see this 4-hour candle, it's going to be some strong candles pushing up, okay? And then that's exactly what happened. It confirmed the move right there, and that's exactly how, you know, we could have been able to take advantage of that opportunity right there, okay? And it's the same way the whole way up, man. And let's see another one, right? So we can see this move right here, this impulsive move, right? Impulsive move from low to high, right? Because it broke this level right here, so it's characteristics of an uptrend, okay? Then we go and we measure the move again. We measure the Fibonacci move, right? The retracement of this move. Again, this one ends at the 50% fib level, okay? And then we use other confirmations, right, to get into this trade. We use other confirmations with some confluence, right? And that's how we take our setup. And then we just wait off of these levels, right? We wait for bullish, right? A nice strong bullish candle, right? Or a candlestick formation to tell us that momentum could be heading back into the upside, okay? And that would be a good time to take the trade, okay? Is that simple, guys? Fibonacci is very, very simple to use. On an uptrend, right? For uptrend, you do it from down to high. If we're going on a downtrend, all right, let me find a downtrend for you. If we're going on a downtrend, then it's from high to low, right? Like we got into a downtrend in most recent price action, right? So how we can do this right here is, right, if this move right here, right, we got this push down. Now we're on the 1 hour, right? This push down came up. Then we have the retracing, which wicked at the 61.8 perfectly. All right, also hit some structure. So we could have took our entry based off of this level right here confidently and put our stops above the high. Okay, and look what happened afterwards, all right? That's what started the downtrend overall. All right, now if we go to the next swing high right here, right, we got this little structure level right here, right? Now look at right there, right? We got this move, right? It started consolidating, then finally went pushed down and broke this structure right here, right? We wait for the retracement, right? We see this retracement, 61.8 again, right? Perfect entry. If you got in right here, if you have a limit, like a sell limit right here, right? It would have wicked your limit and then dropped, okay? So that's essentially how you use the Fibonacci tool. It's very, very simple to do. It might take some time for you to get used to it, but it's very simple to use once you actually understand the concept of it, right? Like right here again. Okay, another one, right? We got this impulsive move. And how we know is because of this breaker structure right here. We wait for the retracement, okay? Look, it played around the 61.8 until it finally dropped. And it dropped quite a lot. Okay? It's that simple, guys. You can use it on any chart, any currency pair. It's very, very effective. It's the only thing that you guys will see me use, right? Besides maybe the moving averages, right? That because it works perfectly with structure, right? When you match it up with some structure levels, it works perfectly, and you can make a lot of money by utilizing the Fibonacci tool. Okay, so I hope you guys understand what I was saying. If you guys don't, by all means, just leave comments down below so I can further elucidate. I can further tell you guys exactly what it means. Okay, and if it comes to it, I will make another video. So that's it for this one, guys. Thank you. How's it going, you guys? Abel here. I'm back with another video. In this video right here, I will tell you guys that this is one entire course. It's going over market structure, which plays a huge part in my trading style personally, right? Because once you learn how to read market structure, you learn how to read the overall trend, right? The overall moves of everything. Okay, it's very, very important. So listen close to what I have to say. Please rewatch this video a few times, right? Because I'm gonna show you guys right now with this little drawing, which is it's not the best drawing whatsoever, right? It's pretty ugly, but you know, I'm gonna go over it. I'm explaining, and then we're gonna go to the real live chart so you guys can get a real understanding of what I mean by what I'm saying right here. Okay. Now with market structure, right? When we're talking about market structure, we're talking about like places where price went and failed. Okay, like this right here, right, is a market structure.
Go back outside and come back in.
Point that I'm going to be paying attention to. Why? Because it came here and failed, right, and it double bottom. Okay, this also is market structure, right? Because it's also another place where price failed. All right, and that goes the same way all throughout. All these points where price turned around, right? That is a type of market structure. Okay, there's something happened there for that level to just stop the way it did, right? It's not just stopping there for no reason, okay, guys? So all these little peaks, I'm not going to mark them all out, but all those peaks are market structure, okay? And those you obviously want to, you know, be aware of those. So if price gets back to those levels, you can tell that something is going to happen off of those levels, okay? So what we do now is when we're doing market structure,
now go back in there and try again.
See
go outside.
What current price is doing to the previous
Don't
structure
speak till
level.
you come back outside.
Okay, and based off of this example right here, right, we have this is a downtrend right here, right? We found a low, we double bottomed off of the low, right? This structure level was not broken, okay? That's key, right? This structure level was not broken. So if this would have, like, if this low right here would have been broken, right? If this would have came down and closed below this low, then the trend, right, the downtrend normally will continue, right? It will be a continuation of the downtrend. But since it didn't break the low, right, and it came back up and pushed off and broke this structure level right here, okay, listen to what I'm saying. I know it's going to be, you know, it's going to take you guys a few times to actually, you know, get it. But, right, once this level is broken right here, right, with this big impulsive move, you should automatically start thinking like, all right, maybe we could start going into an uptrend now, and this downtrend that we had is possibly over, okay? So keep that in mind, guys. It's very important, okay? Now, let's continue back with, you know, market structure, okay? So now, since we got this big impulsive move, this big move right here, right? And now we got this little pullback, okay? This is literally just a pullback, all right? This is where people get caught up in trades because they see this move down, right? And they think like, oh, no, it's a downtrend. It's a downtrend. It's not. This is just a pullback to this overall
So we
move,
still going,
okay? And this is a
name?
pullback that we measure, you know, when we start doing our confluences, which I'll go over in the confluence series, right? This is what we measure, right? The overall trend, where we measure this move so we can find an entry. We don't want to sell this. We don't care for this move whatsoever. Do not get caught counter trend trading. You're gonna lose your money, okay? So what we do is we figure out, you know, we let this move play out, all right? We watch it where it goes, okay? Normally when a pullback happens, right, after a strong move, normally when a pullback happens, it happens right back into structure. All right? Listen to what I'm saying, guys. When this overall move happens, the pullback, which is important, right, this is what we look for, happens right into structure, normally, all right, a good portion of the time. All right, so this is where we will be looking for our entry, right, around this structure level, because we know price should probably fail around that level because it failed previously as resistance. All right, so now, as everybody knows, previous resistance, right, can turn into support. Same concept, right? Except we just call it market structure, right? Previous, this bullish move, right, has now fell into, a retracement, and the retracement is retesting structure. So when people say structure, this is what we mean. Alright, so this is where we're gonna be looking for our entry. And once we find our entry, we take this position long. Alright, we take this buy and we write out this next move. Okay, so we don't care for this sell, guys. Please stop counter trend trading. We don't care for this sell. Stop chasing trades, right? Stop chasing the markets. The markets do not want to get caught, right? Let this play out. This is what we want. Right? This is our move right here. Okay? And like I said, obviously, you want to add a whole bunch of more confluences to it also, so you can know you get a good entry, right? But I'm not going to get in there in this video. I'm just talking about market structure, right? So now, since you see this impulsive move here now, right, off of this structure level, right, and you see this impulsive move up, which is a characteristic of an uptrend, which is what I have here, right? Because now we're creating higher highs and higher lows, which I'll mark off in a second, right? We got another breaker structure right here, right? So this is the next breaker structure that we needed to break in order for it to continue with the uptrend, okay? So we got a break of structure. So what are we waiting after the break of structure, right? The pullback. Do we sell the pullback when we're on the uptrend? No. You let that go. Let it go. Do not chase it, right? Wait for the pullback. See where we're at, right? It's going to retest structure most of the time. And when it's coming down to retest structure, that's when you start looking for your entry. That's when you start adding up your confluences to possibly get in another long position. Okay? And just so you guys can see exactly what I mean by like everything, right? We're going to
try this.
The higher highs and higher lows, so you guys can see the characteristics of an uptrend. But you guys really have to get familiar with this stuff right here, guys, or else you're not going to be able to really, make it in this market whatsoever. Okay, so you got higher high, we got higher high. Again. Alright, so we got Alright, so we got one high, two highs, and then we got the ultimate high again, right? And now for the lows, right, but we got to mark off the higher lows also, because it's obviously the characteristics of the uptrend. Right, so we got the low, higher low here, right? And we got another higher low right here. Right? And we also got another higher low right here. Okay? Now look at what we have here. So we have the lows, right? We found the low with the double bottom. Alright, we got the push up, we just created a higher high. Alright, it's a higher high because it broke this right here, this peak right here. Structure level right here, broke this, and created a higher high. If it never broke it, right, then we're just going to double top. But since it broke it, it's a higher high, right? We came down to a higher low, right? It broke this next push up right here, broke this high, so it created another higher high, right? It created another higher low now, because this low right here is higher than this low. Right, and then it came back up, it created another higher high. Okay, because it broke this level. And then another high. low. This is the characteristics of an uptrend, guys. When you start seeing things like this with higher highs, higher lows, higher highs, higher lows are created, right? That's an uptrend. Don't look for sells in an uptrend. Right? You're only going to be losing money. I don't know about you guys, but I hate losing money. Right? And once I figured out this right here, it literally took my trading to the next level. This right here, this basic concept of looking for higher lows and higher highs. Right? Medium market structure, looking at break of structures, right? Looking at all this stuff will change your trading game. It will take to the next level, like literally next level. Okay, now let's keep on marking this off, right? So we got the higher, right? We got the higher high, and then we got a double top, right? It's a double top formation, which was never broken, right? It didn't break that high. Okay, so now when we get a double top formation, right, and we get this push down, and we get a break of this structure right here, right, let me mark it off. When we get a break of this structure right here, right, once this move right here breaks this and closes below it, right, a few candles close below it, not the wicks, right, we don't care about the wicks when it comes to structure. We want the candle bodies to close below it. Alright? That's when we start looking for
I'll make sure the gang unit puts you to bed for the next year.
Lower lows and lower highs and lower lows and lower highs, okay? And then we're just going to continue riding this wave that we were doing. Last time, guys, is really that simple, right? So we got two lower highs. Right, so we got double top, break the structure right here, so we're top. Automatically, you should start thinking, all right, maybe we can start going downtrend. So you wait for this pullback. You don't buy this now because structure's already broken. So you don't buy.
Let me see your hair. What's that in the bottom?
Right? You wait for it to stop. You wait for it to get to some type of structure.
Turn the light on.
And as you can see over here, right, this is structure level. Also, that is stopped at right next to it. We add our confluences with like Fibonacci, counter trend line breaks, all these good stuff. And we took our trade, and then we ride the sell, right? We ride the sell, okay? And when we ride the sell, right, these lower lows are going to be created, which is the characteristics of a downtrend, okay? So we got that lower low, right? We got this lower high, lower low, lower high, lower low. And those are the characteristics of a downtrend. It's that simple. Okay? There's no need to overcomplicate it. Once you learn this concept right here, which I'm going over, it's going to take your trading to the next level. It's literally going to change the game for you. Okay? Learn this stuff. Take a picture of this chart right here if you have to, right? Look at the characteristics of an uptrend. Look at the characteristics of a downtrend. All right? And go on a chart and actually start marking them off. Okay? Now, all right, now that I got that out the way, right, make sure you guys save this, because now I'm about to go to a live chart to show you guys exactly what I mean. Okay? So right here, we're on Euro USD, okay? And Euro USD, we're going to mark off, market structure, right? So we got this low right here, right? We got this move right here, this push up from this low, okay? It really didn't break no structure levels. I mean, there's a few candles that closed above it, so you could count it, right? And then we get this push down, all right? This push down right here, what does that create? We got the low. We can consider this a higher high, a higher low. So now, once we get the higher low, we should automatically start thinking of higher high because of the uptrend right here. And we got a little push up. It closed above it, not much, but it did close above it, right? So we got a higher high, we got a higher low, right? And then we got a nice push up right here, right? For another higher high, right? Higher low, higher high, right? Higher low, higher high again, right? And then guess what? We gotta break a structure. Okay, we gotta break a structure with this right here. This break right here is a break of structure. Alright, so now we're gonna be looking for sells, okay? So we wait for the pullback, look at where it went to, went right back into structure right here, and then we sell it. Boom. Alright? We sell it. Alright? And we could have made money off this move. Okay? Now we're going off market structure, remember that. So you're gonna take a few losses, but you're gonna take
that ball thing is
more wins than losses by going by the strategy, okay? Because now, if we would have took a sell right here, right, which normally it looks like a sell, right?
Make sure your iron is
this
paying
right here
for
looks
the
like a
shirt.
sell with this pin bar, back into
I'm not
structure.
gonna pay $20 for them to him a pay.
Right? We would have
No.
took this sell, and the
I'm
ultimate
iron
probably would have
it.
lost.
It
Or
depends
actually,
on
a
the
stop loss, Our stop loss would have been in profit.
It's
so
$20.
technically,
You could have put all in. That's
this is
the
big
the
move
shirt
right
and the
there.
pants.
And we
You
took a
don't,
little
ain't
loss
nobody pay no
right here with this
$20
push right here, right?
for
We
it.
took a little loss,
Cause they don't
but
charge
it's
you
fine,
about
right?
20
It is
anyway.
what it is. It's one of those we got
Just to
shake
press,
off.
just
We
to
got
him
push up right
and
here,
iron up him.
which is the start of another uptrend. All right. Once we get this break of level right here, this break of structure right here,
I'll
right,
iron
we
the
should
pants.
be
He gonna
thinking
do. I'll show him
uptrend
my
again,
blue shit.
right? Because this is the structure level we need.
I
This is
want
the
that
most
bitch roll
recent
off.
structure level that you're looking at. All right. So then we get the pullback. We get our entry right here based off, this is structure level right here. I hope you guys are seeing this, right? This beautiful structure level right there, right? That never broke. All right. And we got this beautiful bullish candle off of that level. We take our trade, all right? Same concept, all the way up, all right? Pull back into structure. Again, remember I said that. Look at this, pull back into structure. And we're off, all right? And we're off. And I hope you guys understand what I'm saying, okay? Learn this concept, guys. It's going to benefit you tremendously, all right? Now, I'm not going to go into every single chart and do it because it's literally the same concept throughout the whole thing. But get familiar with looking at structure. Get familiar with looking at break of structures, right? Because it's gonna take your trading to the absolute next level. Okay? Now that's gonna be it for this video. Please rewatch this video a few times until you fully understand it. Go back into the chart and start marking off structure levels, break of structures, trend reversals off of structure, all those good stuff until you get familiar with it. This is gonna take your trading to the next level. Right?
So if you pay that $250,
Out.
you still looking at the same price a month? Huh? If you pay that $250?
What's going on, everybody? It's Abel here with another video. And in this video, right, this is the cheat code. Okay, guys? This video right here is what I like to call the cheat code. It's going to be based off the dollar index.
Wait, what is it?
The dollar index. And the reason why I call it a cheat code is for that reason. Right? Because we all know, or we all should know that the dollar itself, right, the currency, the dollar currency, is the most strongest currency in the world, right? It's the currency of the world. Which, most transactions, they have to be converted into
dollars for it to go through. So the reason why I like to call it the cheat code is because simply, if you figure out what this chart right here that we're looking at right now is going to do, right? The dollar index, the DXY. For those that don't know how to get it, right? Just type up DXY. If we figure out what this chart is going to do, then we essentially know what all other dollar pairs.
If the market drop, we lose all our money in our 401k.
Cheat code, right? Because instead of marking up, 10 pairs, $10 pairs, you can just take your time, mark up this dollar index, figure out the overall trend, and then use that with Confluence, on other charts. And that's exactly what I'm gonna do today, right now, for you guys, right? I know I've been meaning to drop this video for a while. Finally, I can get to it now. So definitely take some notes, pay attention, watch this video, but don't just watch this video. Watch every single video on this course multiple times if you guys are real serious about it. Because I know there's stuff that you guys missed. You're not gonna be able to get it all in at once. So go over it a few times, guys. All right. But just looking at the dollar index, I'm gonna analyze it just how I analyze any other pair. Right, go to higher time frame, line chart. Go from the line chart, just start marking off, key levels. Key levels of price that had occurred recently. Right, something like that. It's very, very simple, man. Don't be scared to, mark these off, but make sure it's the strong levels, where price came and just stopped that strong price for a reason, right? Just like I said at times, price doesn't just go and just stop at a certain point for no reason. There's a reason why it stopped there. It's just a matter of you keeping that in your mind when you're actually going through charts, going through everything that you're going through. You want to keep that, in your mind so you can be aware of it. Right? So what I did here is I just marked off a few key levels, right? I don't care about any of these up here right now because price hasn't even got up to that level. So I really don't care for anything higher than this right here. If we get to that level, then I can mark my charts up. Alright, but like I said, we got some key levels now that I drew on the line chart. If you don't know why I do it on the line chart, then go watch my support resistance video. Okay? And based off of these key levels, right, we're currently at a key level right now that's testing and is getting rejected right now. But if you look at the previous daily candle, we also had a bullish engulfing, right? And followed by a series of higher lows, right? We got a higher low, higher low, higher low, right? So, what is that telling us? There's a few different things that could be telling us, right? It could be telling us that we could, see a push up based off of, just market structure. And overall, right? Overall, we could probably see some momentum to the upside. Right, but for right now, right, since we are at a key level, that is why we're seeing this rejection right now, because we're at a daily key level. You have to realize, right, that we're at these key levels. Price, is going to get rejected. It's going to be.
I can stay here and watch that show all day. And don't even watch nothing else. I'm recording it.
It's because of these key levels. They're based off of higher time frames. The higher time frame, the stronger the level, right? The more significant the level is. And that's why I only do it on the higher time frame. So I know when it gets to that level, right, when it hits one of these levels, I know that I should see a nice reaction off of those levels, right? And when I be nice, nice enough that we could possibly take a trade off of those levels, and profit some pips. Alright? But this is all we're looking for right now. Let's see what the weeklies are looking at. Just to look at. Look at the weekly. Right, the weekly time frame itself is just a lot of indecision in this pair on the dollar itself. Right, for the past month, past 4 weeks, it hasn't been doing much whatsoever. It's just been consolidating. Right, it's just been consolidating like crazy. But if we go out more, right, when you expand more, you see exactly what is going on. Right, so on a daily, I said that we could get a push up, right, based off candlestick analysis and market structure. Now on the weekly though, we see that we're clearly downtrend, right? Clear downtrend. So what I want to do now is start marking this up also. Right? Got something like this. Throw some fibs on there of the impulsive move down that broke this level right here. Right? We want to start marking things up. Start getting to where it's easier for you to read as soon as you open up this chart, right? And just on this level right here, right, this is our first zone that we want to see touched, right? We want to see price come up to this level. And if it comes up to this level, then that's where we're going to be looking for, market structure to go to the downside, right? Market structure go to the downside with, we got the high, lower high, lower low, lower high, lower low, right? We want that type of structure formed in the lower time frame for us to enter a sell here. If we don't see that, then we don't take no sell. It's that simple, right? And so that's just my analysis on the higher time frame, right? Overall, right, I'm bearish, going to be bearish on the higher time frame. But we could definitely possibly see another push up to the upside, and just based off of, since we're on a higher time frame, like these moves, we will be able to catch, a lot of pips on these moves, right? So as of right now, I'm just looking at, short-term dollar strength, possibly, right? Possibly, because it could definitely not do it. But as of right now, I want to see, some short-term dollar strength, another push to the upside, to see if, we could see some price action up in this level. It's telling us that, all right, it could possibly go back down, okay? And if not that level, this level right here also, where 61.8 is, that's another level that we want to watch out for if this level breaks, okay? The beauty about the strategy that I'm teaching is that we don't just get in once it hits a level, right? No, we need market structure telling us that's ready to go in that direction. So if it gets up into this level right here, right? Let's say we double top, let me draw that for you guys. Right? Say we get, we do see a push up into this level, right? Then we get a push down, right? So we test that. Then we get a push up. The only way we would enter a sell, right? The only way we would be selling the dollar is if we see this breaker structure right here, right? This break right here. Once this break right here happens, right, and we see that, then we wait for the pullback, and this will be our entry for all dollars, and we'll be shorting the dollar itself, okay? So, it's very simple, guys. It's not hard at all, especially my strategy itself. It's super, super simple, like super simple, right? But it's just a matter of just seeing, just having patience more than anything. Right? You gotta have patience to be able to be a trader, period, right? But now say we get a push up and it does break through the zone, right? Then we just see something like this, same scenario, right? Get the push down, double top again, right? We always want to look for a double top, right? The double top is that's giving us our clear right here, right? Now once the second leg forms for the double top, it's either we're going to get a break of this or a break to the neckline, right? Break of the neckline is what we would prefer. But if it doesn't happen, then we know how to react to it. But other than that, this break of this neckline right here, right? If we get a break of that, then we know we're going to be selling the market, right? We're going to be selling the market. The neckline is the key, okay? I'm actually going to make a video on just the neckline also, so you guys understand it, right? So we get this pullback right here, and this will be our entry for a short to sell it on the break of this structure, okay? So now, right now we have a little mini bias.
I want some chicken.
We have a couple scenarios that could play out for us right here with the dollar index. Now watch how we use this.
What time is it?
This index chart, right? This dollar index. We use Confluence to line it up with other, with other dollar pairs that are out there. Okay. So I'm expecting, short-term bullish momentum to eventually be an overall downtrend, right? I want to see one more push up to see if I can get a nice entry. Will it push up? We don't know, right? Because we are at a significant level, like I told you guys before. Right here is a nice strong level.
We go to the bank.
Off of. But
then go to
I definitely, for me to get involved into this market, I want to see one more push up. I want to see one more push up into this zone before I take any trade. Right, and I'm using this. Right, remember, this is a cheap one. I'm using this bias to look for my setups right there. Before I put these other pairs, like the other currency pairs. Right, so if
I ain't like the Navy to play with.
Bullish momentum, right? Let's see what the Euro USD is like.
I can do mine.
So now look at this, right? If I'm expecting short-term bullish, right? If
I
I'm
know I don't
expecting
want
a
fast
bullish
music.
move, right? Probably over the next day or two. What should happen to Euro USD? Okay. If you said that Euro USD would drop, then you're correct.
So you ever found the letter?
Simply because, right, when we're looking at these currency pairs, all we're doing is trying to figure out the strength of the first currency pair against the other. Okay? So we're trying to figure out if the euro is going to get stronger or weaker against the dollar. And if we think that the dollar is going to get stronger, then that will make the euro get weaker, which will cause this price to drop, right, to go down and to drop. So since we have that bias, right, what are we looking for? We're looking for, a short-term sell, right? Because in overall, I am going to be expecting, since we're on a high time frame, overall, I would expect possibly a push up.
Hey, let me call her. I might be okay.
And based off of this weekly time frame, right, these weekly levels right here, right, we can possibly see a push down into this zone before we go up for the stars, right? Shoot for the stars. Right. Remember, all this is based off of the cheat code, right? My analysis on the dollar itself, right? I'm expecting short term, bullish momentum to then eventually a long term sell. And if Euro USD does the exact opposite of the dollar index, which it really does, it does the exact opposite, right? Then we should expect a short term sell for a long-term buy, right? So it looks something like this. Something like this. And look at that, right? Remember on the dollar index, I said they have 4 weeks of just indecision. Same thing with the euro. Like those two pairs really do this the exact opposite of each other, right? But overall, this is what I want to be looking for, right? I want price to push down into the zone. I'm lining up with structure levels here. And if I get what I want, right, if I get market structure indicating we're ready to go for the buy, then I'll go for the buy, right? But other than that, I definitely want to see some more momentum to the downside, to then eventually a push, because on the dollar index, which is a cheat code, right? The cheat code we're expecting to push up to then eventually be a nice overall drop, right? Okay, so this is what I'm looking for EU, based off of the cheat code itself. Okay, now let's see what else we got. AU, right? I'm pretty sure AU will be the same exact concept, right? Because of, the strength of the dollar. That strength of the dollar really plays a big part. I'm telling you guys right now, right? Let's just mark off some key levels. And the first key level I see is this strong zone that we're currently testing right now, right? And since we're testing, we're in a strong zone already, let's see what we expect, right? We expect the dollar itself, the strength of the dollar. We expect that to overall, lose value, right? Overall lose value. But in the short-term time of things, we do expect some strength soon. And that's exactly what's happening right now, right? We see some strength. We see price, showing the strength of the dollar, which is why the price is going down. Now, since this move is already looking like it's happening, right? If they want to continue dropping, then they'll continue dropping probably like around here, right? 76 level.
Yes.
And then if we get,
yes,
momentum, which is what we're going to be looking for, because eventually, we're going to be overall bullish, because the dollar itself is going to be overall, weak. And if the dollar is weak, then that means AUD USD will rise in price.
Yes.
So what we can expect is a nice push down, right, into the structure level right here. Right into this zone right here, right? Some into there. And off of this 78.6 level, we want to look for some bullish momentum, some bullish market structure telling us that they're ready to go, to the upside. But I'm definitely going to be looking bullish also on this pair, because, look at this. All this structure right here that was broken. Right?
Interest rate is 4.5.
Right here. And now we're just getting a little three-way pullback.
We just bring this with them.
And possibly, go long on this position when it shows up.
But
All right, now I hope you guys. I understand it's going to be confusing at first,
You said what?
just because I'm flipping, from bullish to bearish, bearish to bullish. But
You can say
once
it'd
you
be
guys
like
get
5
understand
years
the
from now. So
concept,
ain't nothing like right now.
of market structure,
Cause for you to be, well, you
of
know,
the
have
dollar index being the cheat code, I guarantee you guys are going to be able to
okay.
kill this market as soon
I
as
want
possible.
to add on.
Because
If
it's
we add
super
on, the only
simple to
thing
keep track of,
you could add on from
super
the
effective
shed
to use.
over.
You
You move that shed.
it's just amazing. Okay, so now let's go to the U.S. dollar. Mark up some key levels real quick. Let me see what I got. Right.
Look up black toothpaste, charcoal toothpaste. That's what I want.
Put another level right
And read the
here.
reviews. The Pyron say that's what she used. She has some pretty white teeth.
Like what price is that? Okay. Daily.
And she said get the paste, not the powder.
Okay. Alright, we got a few levels here, right? So, same concept, right? If we're gonna be bullish to dollar,
They're gonna try to
right? Overall bearish, short-term bullish. So what should we expect, right? Especially on these pairs that begin with the dollar. These ones, I'm not gonna say they follow the dollar index to a T, but they usually follow it, pretty good. Okay. And since I'm gonna be short-term bullish, long-term bearish, just look at these levels that we previously broke, right? If we're gonna be, just like I mentioned, short-term bullish, right? We could possibly
We'll see. That's
expect
she said she got hers.
break to the
She
upside,
says $8.
right? And then possibly a push back down for the
Black
overall
toothbrush.
sell, right? And this matches up with the dollar index. This is kind of
Look at Amazon.
look at this level that was broken, right? This level went all the way back to last year, and it was holding strong, and it finally broke. So we should definitely see a push back up to retest these levels, right? And we could honestly see a strong rejection off of those levels, right? You want to pay attention to stuff like that. Now, when we're looking for, a place to start looking for, a setup, right? You want to start using market structure. First of all, we already have market structure right here with this breaker structure right here all day long, right? Once this level broke, and this level broke right here,
Van Similar.
we should be thinking about uptrend, right? We should think about buying.
All right.
Buying
I just have a
market.
quick question
And it's possible. It's playing into
about
exactly
my
what
public
the
loan
dollar
forgiveness.
is
I'm
going
trying to see how
do
many
based
qualified
off of
payments
how
have I made so
short-term
far, and how
buy,
long
like a day or two,
I'll be in
to
the program
eventually sell.
before like my loan
So
is
that's what we're
discharged.
going to be looking for.
And I'm
It's a
also
breaker structure.
I'm trying to see, did y'all give me credit from when I was with Navient?
Yeah, so
Because I transferred my loans from
that's what I'm gonna
Navient
be
to
looking for.
my
Right?
Fed
We
loan.
possibly look for a buy, to eventually get up to these levels, and then look for a sell. Okay. Okay. So let's see now, right? I hope you guys are really understanding what I'm saying about this, man. Because I know it's gonna take some time to actually really get it down packed and see it. Especially market structure. But once you realize how valuable and how significant market
Because
structure is,
the same
you're gonna want to trade. I'm telling you guys right now. The dollar index itself. I just marked
because
the
the same plan
telling you
I'm
guys
on
right
right
now,
now is the same one I was
they're going
with
to follow
Navient.
strength of the dollar.
Yeah.
Damn near identical. Right? So just by me marking up these charts, I hope you guys realize how powerful the dollar index is, right? I'm just taking my biases on certain pairs based on what the dollar's going to do, right? It's going to be one of my confirmations for me to enter a trade or take a trade. And it works, right? It's what I've been doing for the past 2 years, a year and a half, 2 years. And it has been the most profitable way for me to actually start trading, was by utilizing the dollar index and figuring out what the dollar itself is going to do, okay? Now, once you get more advanced, right, and you want to add more to it, then you can start looking at the other indexes, like the Japanese yen index, the euro index, see what those are doing, and figure out if it's going to match up with the bias that you have on the dollar and take trades like that. I personally don't do that, though. That's always an option, though. I just look at the dollar, and that's all I really need. All right, so that's going to be it for this video, guys. This is the cheat code video. I'm telling you guys, look at the dollar before you take any setups. Make sure you know
how long does it
where
normally
the dollar
take?
is heading, short term or is heading long term, so you're not going to be stuck in the middle. and take full advantage of this dollar.
Because it's been longer
I'm
than
telling you guys,
it's been
it's a
long.
cheat code, cheat code, cheat code. Okay. So that's gonna be it for this video. Definitely, please utilize this, guys. Watch it a few times, like I said, and just continue studying the course. All right. Thank you.
How's it going, you guys? Abel here, and in this video, right, I'm putting it all together. Everything that we have learned so far in this course, whether it's market structure, divergence, you know, everything possible, guys. I'm going to put it into one video and show you how I personally look for trade setups to take.
Okay.
You know, and
So
how I
anything
get
around
such
2007?
great returns, right? And far more wins than losses. You know, it's based off the same exact concept that I'm about to go over now. All right, so definitely pay attention to these videos. This series right here is actually one, you know, this section right here, the putting it all together section, you know, the fluent section, is one that I'm going to constantly be placing a lot of videos in, right? Because I'm always, you know, adding new tricks and techniques to the trading style. So anytime that I find something new that I want to add to my style, I'm going to implement it in these next videos that I come out with, so that you guys are always up to date with the way I trade.
Okay.
I'm very excited for that, you know. So definitely, this is gonna be part one of, you know, this putting it all together section. You know, the confluence of confidence trading, which is what I like to call it also. And what I mean by confidence trading, right? Confidence trading section is that once you have enough confluences in the market, you know, and you see all the things that line up, you get a really good feeling about your trade set. You know, you go to sleep at night without having to worry about your trade that's open. You know?
Okay.
So that's what it all comes down to. And enough of me rambling on. I'm just gonna get right into it. Okay. So what I do when I first go to the chart, I go to the higher time frame. I always go to the higher time frame. All right. I go down to the line chart. Okay. Listen, I'm telling you guys right now, do this. Right.
Okay.
Go to the line chart and I start marking off, you know, some key levels that I'm looking at. Right. So key level right here, right there.
I got
right?
you.
Those are the high and the low of this move right here. And then I find one like right here in the middle. Okay. Those are key levels, right? I use the line chart, like I said. If you guys watched my Spoon Resistance video, I use it because it's a very accurate way to place these levels, right? Because with these lines, you want to treat them as, you know, as zones. So there's really no perfect
what
way
day
to
you
place
say?
them, right? But when you use the line chart, you can get some very accurate, you know, lines based off of that. Right, so I do that. You know, I mark off some key levels. You know, I see if there's any, you know,
So from August 2013.
that I could place that I could possibly touch. You know, eventually. You know, so when I look at targets and everything, you know, so I got that trend line right there. You know, if you're using TradingView, an easy way to do it, right, is this magnet over here. When you click on the magnet and you do it, right, it'll put it right to the low, right to the bottom of these places. So it's real perfect, right? So what I'm looking for EU, right? EU, obviously, you see, is, you know, it's been on a nice little uptrend recently since like November. It's been just pushing up, right? And it broke, you know, a structure level, right? A nice structure level that I'm gonna mark off right now, right? This level right here was previously broke, but live just push up. Okay, so I'm anticipating, right? I'm actually going to be looking for a sell. I'm let you guys right now, right? This is live as we speak. I'm going to be looking for, you know, another sell opportunity to possibly get this pushed down into the structure to retest this area, and then to possibly go back up into it, you know, into a buy.
Okay.
I know I'm very big on not counter trading, right? But when we're on the higher time frames, like if I'm on the daily right now, you know, you're not gonna obviously just let this whole thing move out before getting here, because that's a lot of pips. It's like 400 or 500 pips, you know. So we can definitely, you know, take these setups, you know, confidently, knowing where we're at in the overall move. And that's exactly what I'm doing right now, right? So I see, this is what I'm looking at first, right? Structure. Remember I said structure is key. Structure is important, right? So we got this breaker structure right here, and it hasn't been retested just yet, right? It has not been retested ever since it broke up with this right here. Okay. So I'm anticipating that retest, right? Because a level that's broken tends to get retested damn near 80-90% of the time, okay? And that's what I'm looking for, all right? So this move right here is what I'm looking at now, and now I go down to a lower time frame and I start, you know, start looking at where I'm at, right? So I know that I'm looking for this level to get retested again, okay? And if you can see, right, what do we have here, right? What do we have here? Look at this, guys. Now remember I said, right, we got this right here, right? We got the push up, which was our uptrend, right? Because it broke this level, right? So we got the push down, which is the retracement that we look for to enter a trade, okay? And then we have another push up. What happened here, right? This structure, you know, did this close above this level? No. So what do we have here? We have a double top. Okay? Remember what I said. If we have a double top, you got to start switching your mindset. You know, you want to clear the board, take all your trades off of the board, okay? And wait, right? Have patience, sit on your hands, and see what happens. And ultimately, right, we have this move right here, this little move right here, right, which closed below this level. Automatically start thinking downtrend. Right? Automatically start thinking downtrend. All right? Just because of this, is that simple? Yes, just because of that. All right? So that's what I was doing. All right? I was actually in this trade. You know, I had got into this trade, you know, a few days ago where I was actually selling this move. Right? I sold this move right here. Right? And that's because I seen this downtrend. Okay? And all I waited was for a minor pullback on a lower time frame. I think I was on the 15 minute, right? A 30-minute time frame, and I ended up taking this move down back into the structure level right here. All of this right here, right? This consolidation zone right here is structure. Right? This whole zone right here is structure. Right? If it consolidated it here in the past, what do you think was going to happen here? Right? It was going to consolidate, which it did. Okay. Now back on topic, right? So we have this move down, right? And look at this strong push down. So what's going to happen on this strong push down, right? After we get out of this consolidation zone, it's pushing up right now as we speak, right? What the hell do you think is going to happen? Right? This is the move. This is a pullback. This is the pullback. Why? Because this indicated that we are in a downtrend now with this break right here, right? So we at least, you know, at the minimum, right? We take our Fibonacci, okay? We take our Fibonacci from here, sit down here, right? From high to low. Right, if you guys watch my video on Fibonacci, you know why I do it like that, okay? From high to low. Now we're going to add our confluences, right? Remember when I said, you know, this line right here is a daily structure level, okay? The 61.8 is a very key level also to keep in mind because of the Fibonacci ratio, right? So I like to mark off this entire box, right? The 50% between the 61.8 to see if we can get,
to my question, like,
some type of, you know,
when will
bearish momentum in this box so we can finally take an entry.
How many years
into this thing? Because remember, I'm anticipating for it to drop down here, so I want to take an entry somewhere in this box. To me, it seems like there's the most confluence in that area with this daily structure level. You know, we got the 61% fib level. We also got, you know, consolidation zone. You know, we got a supply zone also. You know, it's all those confluences that you want to have in place, you know, to take your trade. Okay, and all this is done on a higher time frame. Remember, all my analysis, because I aim for like 100, 200 pips at a time, you know, it's all done on a higher time frame. But for me to go for my entry now, right now that I have this marked up, go to an even lower time frame. All right, on the lower time frame, it tells us a lot.
Yeah,
okay. On a lower time frame, you can find much more confluence.
How much
so
is
we
it?
have this right here, this zone right here, right? This is the minor supply zone.
Yeah,
The minor
because
supply zone
that's
right here,
why
as price gets into this
I kept
area,
telling the
this confluence
representative when I
618,
called
right?
before.
That is
I
a
said I
very
made
good
more
level.
than,
You always gotta keep in mind
because
also
before I
this
transferred my loans, that's why I didn't
day to
consolidate
day,
all my
even though
loans.
I'm predicting,
But a
right now, I'm
representative
being
that helped me, she
predicting
said
that what I think
those
is gonna
loans
happen,
should be
right?
qualified.
You want to react to price at the end
Yeah.
of the day, right? We're making a zone, right? This is my kill zone right here.
Yeah.
Can it push above this? Of course it can, right? The market does whatever it wants to do. But
Yeah,
for me,
so
there's
that's why we
enough
left
confluence
those.
in this area.
And it's about the
for me
same
to start
total
looking
you
for
said,
trades
about
in this area
38,
right
39.
here, okay?
At
Once
the
it gets
time.
lower time frames, you know, you can start adjusting these lines.
Okay.
Right? I like
So
this level even better now, right? Higher time frames. Look at this level right here. We got a
Is-
lot
Is
going
y'all
on
waiting
now,
for
right?
the information to come from Nevian
Support,
or
resistance, you know. So I move it up a little bit. We just start, you know, playing around.
What are
with
we-
it, right? That's what we expect. So now, the price is currently at right now. We're actually looking at this live, right? It's currently like making a push up. I'm going to be looking for, you know, for some type of indecision up in this market, and then some bearish momentum off of it.
Yeah.
All right.
Oh yeah, I know.
And, if you really want to, you know, get an even better entry,
Okay.
right? Go down to
All right.
an even lower time frame. Okay. The structure
All right,
is
thank you,
every
man.
time frame, guys. All right. So if we want to look at structure again,
That's
we
it.
want to see how it reacts to this zone. All right. And once we start getting like
All right.
Let me draw it out. Right? I'm gonna show you guys exactly what I'm gonna be looking for me to actually take a trade in this zone right here, right?
That's
So
why
I
I'm
know
trying
that's
to
my
put in
daily
these
key
kids'
level.
head and
I
get
know
these
I'm in the
scars.
kill zone regardless. So what I'm gonna be looking for is a push into this level around here, somewhere around this level, right?
Work, bust your ass off. Work.
Right? I want to get a double top somewhere in this kill
Bust
zone,
their ass.
right?
They
And guess what?
save up.
Once you
Man,
get that,
my student loans
you get
$80,000. How much say?
reversal pound with that.
They could get it. They could get it when they
Anything like
start
that,
taking
right?
all
You
these
get a
classes.
close below structure.
Bust their ass off.
On the 15-minute, right? Listen to what I'm saying. On the 15-minute,
I haven't settled.
did
Now
a
you
full
don't.
analysis
I ain't gonna
on
let
the
you put
higher
that
time
on.
frame. So we know
She good whatever she going
we're
on.
anticipating for this market to continue down.
Whatever not.
But we're not gonna just jump in blind.
Nah,
No, we need to start adding up the
they get to you.
performances. We have
I
a
knew
core
plenty of people
performances
out of high school
Okay.
who was sorry at sports and
Now
all
we
that.
need
They
to finish it
get,
off
you
with
just
this
gotta
lower
apply.
time frame analysis.
And they don't
So if we can
they don't
come
teach
here,
they don't
right,
teach
and
them
get a
kids
double
that.
top somewhere in this zone. We don't know really where it happened. It could happen right off of this red line, right?
You apply, you bust your ass off. What that boy did in that
These
thing.
are
He applied for the volleyball
right, for
scholarship.
divergence. See, it's some divergence showing that's momentum is going to, momentum is going to the downside now. Adding all those confluences, right? And then we wait for this move right here.
And with Nevin, you gotta make
Top, we wait for this move right
120 long
This
payments.
is the entry move right here. This
So
is
when
the
you're in the
direction
program,
move right here.
like
Why?
every
'Cause it
time
broke
they
the
give you a
structure
zero
right here
payment,
after the double top is formed.
that's qualified.
Neckline on the double top, once that
So
breaks,
like since I
guys,
joined that program,
can
they give me
take
not
the
it's 9,
setup
but
all
they have
day
to
long
calculate how much I
and
had when I was
retest
with
of
Navi.
that broken neckline. Okay, so this is your key
9.
entry, right? This is the
Since
one
I've been with them,
9.
but when I've been with Navi,
That's
I
the
did
solid
39. So they gotta.
Right, and once you get that, then you can ride this thing for
They do it every
however
month.
long our targets are, guys. This is really super simple to do. Like, it seems like
I
it's a
just
lot,
got
but there's
with
a
them.
lot of things
I
you
ain't
gotta
got with them
have
the
in place.
whole,
Right, listen,
I
you
got
guys
with
wanna
them
lose money, you
the
wanna
middle
make
of
money,
last year.
right? If you want to continuously make money
Yeah,
consistently,
so
you know,
you need to.
you
Well, I
have
make
to
sure.
go through this process every
So if they give me
single
my
time.
39, I only have
Okay?
81
And
payments.
the
So that's
beautiful thing about this
it's
is
12 payments a year.
is that
Another
the
one,
more you
5
do it,
years.
right, the more that you start seeing it, the easier it's going to be to
Yeah,
spot out.
another 4
So
years.
it's not going to take as long to see these setups, right? Like for me, because I've been doing it for over 2.5 years now, I can see these setups quite quickly.
Alright,
Right?
7 minutes.
So I can see them, and I could, capitalize off
Get
these
your ass
big
up.
moves with being only in the market. I mean, analyzing charts for
I want to hit
like
stop
an
on this.
hour or
Well, I
two,
can pause
just
it.
looking for the setups, not even an hour or two. For my entry, okay, I'll be looking for my entry right in this zone. Once I get this characteristic, right, a double top followed by a breaking structure downward, right, because now we got the same high, a lower low, okay, a lower low because lower than this one. We wait for the pullback to create a lower high, and the lower high is our entry. That's simple.
Do you have to
Right? Stop losses could go right above these highs right here, right? Like 20 pips above the highs. And that's it. Take your trade. That's simple, all right? Not complicated, guys. Trading is super simple. People just like to overcomplicate it for no reason. All right, now that I show you guys exactly how I'm going to be looking for my trade setup, right? You guys know exactly what I'm looking for, right? You guys know exactly where I'm going to be, placing my entry once I get what I told you guys about, with the breaking structure on a lower time frame, right? So now what we're going to do is we're going to see if we can measure our targets, right? Measure where we can take profit at, right? And remember, everything was based on a higher time frame, so I'm going to use a higher time frame for that, for me to take profits, because I like to ride trades out. I don't like.
I hate when people.
I actually have a lot of things to do during the day, so
He
I
just got
can't
fired.
physically monitor their charts. So I'd rather just let it ride. I'm a swing trader by nature, so I'm anticipating for it to be in a trade for a little while, right? But right, for targets, look at how this works out. Right? Look at how this works out. Right? The red line, right? There's a daily key level for us, right? We're using the extensions now. Remember, these are all the things that I taught you guys in this course. Of this move down here, right? We got the high to the low because we're in a downtrend, and then the third, high low, and then we go to the high of the retracement, right? So if we're anticipating this to stop at the red line, like say it stops at the red line, which looks good, right? It could stop at the red line because that's a key level, right? Look at where our targets would be. Our targets would be right back at this zone right here, the one that we're anticipating to get touched anyways, guys. You see how that lines up? All this does not happen for no reason, okay? This is, you know, it's not a coincidence that this is happening. Okay, it's there for a reason. All right, it happens for a reason. Actually, I know I said it don't have for no reason, but all this lines up like this for a reason. Okay, I'm doing this with you guys live on the live chart so you guys can see it. All right. So for our trade, right? You want to see how our trade would look? Our trade would look something like this. If we get in on the red line, right? Normally we will have like a nice, you know,
Where you put them fries
a
in?
nice sell position, right? A sell in there, something of that nature. Or if you want to do like execution, right? You can do something like that, right? Something of that nature in this zone, right? Right in this zone right here, right? And once we get our entry based off of market structure on the lower time frame, right? We put our stops really right up like 20 pips above that high. You know, wherever the high is. So I'm gonna go 40 pips for this one, but it's gonna differ,
I bet
right?
you ain't gonna take the time out to
And take profit is always back at the lows, guys. Take profit always back at the lows, no matter what. Always back at the lows. Okay. So take profit on this setup, right, would be 150 pips for take profit one. Remember, we're on a higher time frame. That's why these are much bigger, right? The higher time frame analysis, though, trading on the higher time frame involves a different level of mindset. You got to be able to withstand, you know, the swings, the pullbacks, and everything else. Okay, so take profit one is here. Take profit two, which is where we're anticipating price to eventually go, is down here, right? We use our Fibonacci for a full 1-to-1 move, and it's right at the top of this zone for 300 pips. I hope you guys are seeing how this is working, right? How it all adds up and it all ties in together. Okay? I just showed you guys everything based off what I told you guys in this course. Everything. Right? You see how it all lines up, right? This is not a coincidence. It lining up here, okay? Whatsoever. Okay? So just get familiar with seeing everything that I showed you guys today, right, in this video. Everything that I showed you in the past course, right? Go over the course non-stop, multiple times. You guys have lifetime access to it. Take advantage of that. Whenever you get some time, rewatch these videos. That's the only way you're going to get better at trading, okay? I literally watched thousands and thousands and thousands of hours of videos to get to where I am today, right? Because I'm self-taught. I didn't join no course. I didn't, you know, do none of that, right? Yes, I am in IML, but I joined IML after I already had this knowledge, right? I'm self-taught, and it's literally by just watching thousands and thousands and thousands of videos and just really learning everything that I was told, you know, that I'm being taught in the videos. Same thing for you guys, all right? So, like I said, this is gonna be it for this video. I hope you guys really understood what I mean by everything that I'm saying right here. Definitely take advantage of having access to this for 24 hours, guys. Rewatch this video a bunch of times, like I keep on saying again. And, you know, and that's pretty much going to be it for this video. You know, if this trade doesn't play out, right, now I'm going to tell you guys this, right? If this trade doesn't play out, right, oh well, it is what it is, right? At least we matched, you know, we followed our rule set that we have in place, you know, for ourselves, right? And that's very important, right? And I'm going to speak about all that in the mindset, the psychology section of this course, okay? So that's going to be it for this video, guys. Thank you.
All right,